looks like we have a Christmas gift from China. They've announced that they will cut tariffs on a different number of goods and consumer items starting from January 1st with the new year. We'll get the announcement just before the Christmas celebration. And that, of course, allows risk assets to move to the upside. On the FX major side, that's allowed the AUDUSD and also Kiwi to move higher. Now, in the meantime, I will also talk about the pound because it seems that the other geopolitical risk event that has been hitting the headlines over the past few weeks, the Brexit, keeps adding pressure to the downside despite the post-election gains that we saw last week or so, and that is owed to fears that there might be a no-deal Brexit. On the AUSD first, I want to remind you that we were looking at this as a 1, 2, 3, 4, and 5, if I'm not mistaken, right? Last time. Now, I'm seeing this as wave 3 extended, right? And 4 and 5. And that is purely because this last move to the upside, although it looks like it's corrective, it is impulsive. We will notice actually that all the moves, the looking like corrective moves on AUSD are impulsive. So why I call this a 4 on the minor degree is because we've moved to level like above to what I expected, which makes me think now that we're going to hit, okay, this ascending channel upside move, okay? We're going to hit that confluence level, which is a confluence level 4. Previous minor wave 1, okay, that still makes it an impulsive move to the downside. It's also a psychological level, the 70 cents, as well as a Fibonacci extension of 100 Fibonacci extension of waves A and B, which is pretty much the duplication of waves of wave A. That makes this potentially a standard zigzag. And it's also very near the 161 point extension of waves 1 and 2 over here, right? So we have 4 different points that actually point to a higher level, okay? If we add onto that the RSI and the MACD, there's very good chances that we're going to move to the upside. Now, what we really need for that, of course, is we need a decisive break above the 69.30. Okay, if we get that, we're looking for at least 69.77, then potentially the 70, and perhaps a false break above to take out break-even stops at the bottom of wave 1. Okay, and then of course we're looking for that to move to the downside. If of course we get a bounce here, then we're most likely looking to move back up again, but this is in the medium and longer term, so we can revisit that of course in the near future. Now that being said, in case prices move down and we see them breaking below the 68.68, then this would be invalidated, okay? But correction could weigh on prices, potentially up to that level, okay, but not below that level. Now, the other pair that moved to the upside, of course, is Q. We've talked about Q. Q is much more bullish than the AUSD. I've actually even, I'm seeing this as a wave to the downside, the end of the wave to the downside, okay? And I'm looking this as becoming wave 1, 2, then 3, 4, 5. We're moving all the way up. Now, this is wave 1, 2. Wave 3 is taken up here to the nearly to the 1, 2, 3 extension, okay, which means that wave 1 is likely to end above the 161.8 extension, okay, because that would make wave 5 at least equal to wave 1 if we assume that wave 3 is indeed here. So from there to there, we're most likely looking at wave 5 crossing above this previous line, which is the 67.91 or so, and wave 4 as well, right? So we should be able to see prices breaking above that level, then coming down for a correction, and then move to the upside. Now, the RSI and MACD both support the bullish move on Kiwi. Now, what I would want to pay attention to on Kiwi, okay, as you have seen, I've brought the channel up here and also drawn the medium line. I mean, you know, we crossed above that level over here, right? We bounced once, we bounced twice. So it looks like we're probably going to move up without breaking below that level, right? Now, the moment we start breaking below that level, then we could start seeing this correction kicking in, okay? Which means that wave 1 might end a little bit earlier than we expect, okay? Now, the break below the ascending trend line, the second one, the bottom one, would mean that this is a wrong scenario and most likely moving into a corrective pattern, okay? So that would mean actually that we're probably going to head back to 64.40 or so, and perhaps even lower. And quickly on the pound is moving exactly as we expected. The thing is that we really, I mean, I was expecting this to be wave 5 over here, right? We crossed below, which means that there is chances now we move into the 2618 extension, 1.2857, and then correct and move to the downside. Or, since this looks quite sharp, to be honest, okay, we could be like 1, 2, 3, 4, and then 5, and that would be A, okay, which means the correction in the end could actually end much lower than 125.85 or so, okay, which would make that move a little bit, which actually would change the whole view on this, okay, unless if we are on a W, X, and Y move, okay, so we can either have this correction ending near the anywhere below the current level, to be honest, anywhere here it could be possible, okay, either as a WXY or as an A, B, and C, okay. If we break, of course, below that level, then we're looking at this to change a little bit as a view, because this is still wave 3, and this is the lowest wave 4 can go up to or down to, let's just say.